Okay. So it's been a while since last time we spoke.
Yeah.
Yeah. So where are we? Where are you? Like, have you been reading the books? Have you been watching the videos?
I have read the book once. I plan to read it some more. But what I really need is I was actually hoping we can do an initial session, at least one session, so that you can take me through from the beginning to the end. I have two burning questions. I have two main questions. Is how do you identify the setup? At what point do you decide what is your thinking process when you see it on the chart? At what point do you decide, okay, this is a setup? I know with a high degree of certainty that this is a high probability setup. That is my first question. Because
Okay.
I've seen charts, I've been looking at charts and QM patterns and all that stuff. And I found that some of the QM patterns do not work and some of them work. So my question is, at what point and with what criteria do you decide that a setup is a setup? So that is my first question.
Okay.
So I would very much like to know your process of how you go about identifying setups. That is my first question. The second question is, some of the QM that I've seen out there, when they come back to retest and then reverse, there are sometimes multiple supply or demand zones. Which one do you decide, and how do you decide which one is the high probability demand or supply zone where you would take the trade? That is my second question.
All right.
Yeah, so those are my two questions.
All right, very, very, very good questions. So okay, let's just get some basic. You said for how long have you been trading?
I've been trading on and off for more than 5 years, but it's really not active because of my family responsibilities and other commitments that I only have very limited time to commit to it. But I also haven't been live trading much because after I blown my first account, then I just stopped altogether and focus on education.
Okay, and then you understand basics about forex trading and basic about market structure, right?
Yes.
Okay, so great.
So regarding the market structure, there is no harm if you want to quickly go through it again in case I have gaps in understanding. But I've been studying those. Yeah.
Okay, no problem. So first of all, to answer your question, like I'm sure you've seen most of my videos. I'm always talking about having a probabilistic mindset, right?
Yes. Yes.
So
yes.
You never know for certain that a particular trade is going to work. There is no way to know that this trade is going to work. So what we have is an edge over a series of trades, not based on a trade by trade basis. On one trade, you will never know whether a trade is going to be in your favor or not. You have no control over outcome. So to start with, we have to lose that illusion of control of outcomes. That's why most people actually get it wrong, because if you think a trade is going to work, therefore you might think that, okay, let me increase my lot size here, and then you end up losing. So what you have to adopt is a series of trade bases where you know that over a series of trades, I'm going to be profitable. But on a trade by trade basis, I have no idea what's going to happen. Anything can happen. Okay, so what you focus on is the process of identifying high probability setups. You just follow your edge. So like you've seen most of my trade setups, I'm only trading one setup. You've seen, right?
Yeah, I've seen. Yeah. I have no problem with the probabilistic mindset. I've been working on that for quite a while now.
Yeah.
But what I do want to know is, how do you decide what a high probability setup is? Like, how do you go about deciding that? And if there are 3 or 5 charts that you in front of you, which one do you choose that to be your high probability setup? That is my question.
Okay, all right. All those questions will be answered. So I think to get started, let me just do a quick overview right now. So like probably you've read in the book, you find more sales than buy setups. Sales occur more frequently than buy setups. Okay.
Yep.
Yeah. And then we have different types of presentation which the market can come to you. We have you can have what is called a fake out, which you have version 1 and version 2. And then there's compression, there's diamond. Yeah, and there can be a mixture of all that. All right.
Yep.
So what you've seen most me posting in the group are the fake out version, most likely it's version 1. Why is that? It's because it occurs more frequently and it gives us a high risk to reward ratio.
Okay.
The diamond setup doesn't occur as much often. Compression doesn't occur as often. But when you look at diamond setups, I mean, fake out setups, they occur most frequently. So that's the reason why I chose to actually just stick with the fake out setup. So
okay.
Yeah. So basically, let me just draw it up to you right now. Are you using your laptop right now?
Sorry, say that again.
Are you using your laptop, your PC?
Yes.
Okay.
Yes.
Okay,
I can
good.
see everything clearly. Yeah.
How about your PC? Are you using your phone or your PC?
I'm using my PC. PC.
Okay, great. So what you want, first of all, you want the market to be either in a short-term uptrend or long-term uptrend. So for example, for a sales setup, right? So you want to see the market pushing to the upside like that. So when you have a double top being formed, or what we call a dual resistance being formed, that setup already gives you a higher chance of working. Okay, so let me just draw this right here, and then we have our market coming back here, maybe twice, and then the market comes here, takes out that, and then drops. So probably that it might the most common occurrence is actually this. So let me just do this. Yeah. So
a quick question before you. Quick
yeah,
question.
Yeah.
You say a short, when you say a short term up or down, are you what time frame are you talking about? 4 hour?
So first of all, it would depend with what kind of a trader you are. So it depends on the kind of a trader that you are. So for example, if this is a 4-hour time frame, this can be a retracement, right? The main trend can be down, and this one can be a retracement, meaning this one is just a short-term uptrend, right? On the higher time frame, it will be just a retracement, while the main trend is down.
Okay.
Yeah. So what you have here is the market giving you a first resistance, which we call the R1 and R2. So in this case, this is what we call a dual resistance. So when you find a dual resistance kind of a setup, it has higher chances of working than the one with only a single resistance. That's number 2.
I see.
Yeah. So when you have a setup with the dual resistance, already that one increases the chances of that trade working out. So this right here is a double bottom, right? I mean double top.
Yes.
And what happens when you say double top? What do retail traders do? They want to sell, right?
Yeah.
At this level here, and then the market to take them out. You see the market pushing to the upside, taking out the stop, the double top right here.
Yeah.
Yeah. So this is the high, and then this is the low, and that's a higher high. So this high here is what we call the QML. Okay.
Yeah.
That's the QML there. And then this low here, this higher low here, is what we call the low and break of structure. We have a low, we have a low here, and the break of structure right there. So the break of structure is coming in because of this candle breaking the structure right here. And then we have the higher high here. This is the higher high.
Yep.
Yeah. And then we have a lower low being formed here. Okay. So what does it mean when we have a lower low being formed breaking the higher low? What does it mean? When
that means there is strong,
when the market
strong selling pressure, strong supply.
So when we have the market going in an uptrend, making higher highs and higher lows, and then all of a sudden we have the market coming down to break the higher low, what does it tell you?
Changes a possible change of direction.
Yeah, possible change of market structure, right?
Yep.
Yeah. So immediately we see this, we know that there's a higher chance that the market is going to do what? It's going to reverse. Okay.
Yeah.
So, and the most what happens is that what you want to look for at this level here, the candlestick that breaks this higher low here. So you're looking for momentum candles. You are looking for inefficiency candles. So right here, you're going to look for those big momentum candles. And when you have those big momentum candles, they tell you that there's a higher chance of price reversing, coming back to this level so that it can actually drop. So at this level here, you are looking for momentum candles. When you find momentum candles, it increases the odds of that particular setup working. So those are two. Remember, dual resistance and also what? How this low is broken. So when you have this low broken by big momentum candles, there's a higher chance of price reversing to this level to fill in the inefficiency caused by that move there, right?
Yep.
Yeah. So that improves the chances of actually this trade working out. So what we've done here is this is what we call the past. This is what we call the past.
Yes.
So you have to make sure that your past is complete. What do you find in the past? You have your QML, you have a low, you have a higher high, and then you have a break of structure and the lower low being formed. And then sometimes you're going to have an MPL here, but it won't always be there. Sometimes it will be there, sometimes it won't be there. So don't look for it on all setups that you're looking at. You won't find it.
Okay. Can you explain a little bit more about this MPL thing? Because this thing really gets me. I really have problem with what defining the MPL.
All right. So what you have is that it actually the MPL is called the mini QML. It's a mini QML. So what you have is the market coming to this level and then going up, and then it comes down, and then it goes up. So when it goes up, it breaks these lows here, these highs here, okay? And then when it comes down, it also breaks these lows here. And then it comes back to this level here, and then drops. Do you see what is happening?
Yeah, there is a QML there.
Yeah. So what you have is a case like this. So
this is in effect a small version of QM, right?
Yeah, it's a mini QML. So when you go to the lower time frame, you're actually going to find that it's actually a small QML. So what it is that it's like this. So when people see this double top here being formed, they want to do what? They want to sell, and then the market takes them out. When they see a double bottom here, they want to buy, and guess what happens? The market takes them out. And then the market goes up to that level there, then comes here, right here, and drops. After taking out both liquidity from the downside and from the upside. So what you're basically looking for, you're looking for an area where there's a lot of rejection from the top side and from the bottom. So when you have such a level, you know that you have an MPL. So MPL is just maximum pain level caused by being stopped out here. That's how it is. So,
okay, so
yeah.
So the MPL is not necessarily at the level of the QML.
So
the previous QML.
No. So what it is that, so when you have this setup like this MPL can be exactly at the QML. It can be above the QML, or it can be below the QML.
Okay.
Yeah. So what determines where price reverses from? So where the price will reverse from is where we have fresh supplies on. So when there's an MPL there, then there's a good chance that price is going to reverse from the MPL. And if the MPL is not there, there's a good chance that price is going to reverse from the higher high here, where we will have a rally base drop supply zone. You understand?
Very clear.
Yeah. So when you have an MPL here, meaning when we sell, our stop loss is just going to be above the MPL. However, if we don't have an MPL, we have the higher high here, the rally base drop, our stop loss is going to be above the higher high.
Okay.
Yeah.
That's why you always put your stop loss above the higher high.
Yes.
I see your chart.
Yeah, because we don't usually have a lot of setups with the MPL. Makes sense, right?
Yep. Yes, yes.
So what we have
here, makes sense.
Yeah. So this is what you call the past. So you have to make sure that you have the past. The past must be complete. This past must be complete. So what do you want to find? You want to find the QML, low, higher high, a break of structure, and the lower low being formed, right? So once that happens, it tells you that, okay, I just have to look for how the market is coming back to me. So once the market comes back to me, I have my entry, then I shoot, just like that. Yeah. So after the past is complete, we're going to look at the progress. How is the market coming to you, right? So like I said, like I said in the beginning, price can come back to you in form of a fake out, a compression, or a diamond, or a mixture of both, of the three.
Yep.
So the one that we choose to trade here from at M&A Forex Traders, we chose this particular setup because it occurs more frequently.
Yeah.
Yeah. So what we have here, it will look exactly like this one here. You see what happens here? You have this double resistance and the market goes up, and then you have the double resistance and the market goes up. It's the same thing. So what we want to see is, we want to make sure that these people here get trapped. So we want to see these support and resistance traders being taken out. So when we see equal highs being created, then we wait for liquidity to be taken out. We wait for that level to be taken out. We don't want to sell from here. So where the retail traders are putting their stop loss, that's where we're going to put our entry. So for example, if you're a retail trader, you're trying to sell from this resistance here, where are you going to put your stop loss? Your stop loss is going to be probably, let me just do this. Let me see. If you're trying to sell from here, your stop loss is going to be up. I don't know what's happening. So it's going to be around this level here. Around this level here. That's where you're going to be, the stop loss is going to be. About 20, 30 pips above there. And guess what happens? What happens? And you're not going to be the only one. That's the reason why these guys take advantage of that, of most retail traders, because they know where most of their stop losses are. Is just above the equal highs or equal lows. So what happens is that they just need to take price just a little bit above the equal highs, take out the liquidity, and then drop. So why are they taking out? Because they know that at this level here, they need the liquidity in order for them to actually fill in the orders here. At this level here, where we had the big candle dropping, there were unfilled orders. So price has to go up. In order for price to go up to this level, it has to take out these people here. And then price will come, and you just tap into this level, and then you're going to experience a nice rejection from this level, and then you can see market dropping. And sometimes you can try and come back here, and then we even drop further.
Okay, so do you wait for the rejection? Do you look for the rejection at the supply zone?
Yes, you always have to wait for the rejection, because sometimes it will not give you a rejection and it can just proceed to go even higher. Why? Because it might be that at this level here, there are not enough orders. There's a level above this level here where they might have more orders. So they can sacrifice this position here and then take price higher to grab the liquidity above, to grab the orders above there and then now go down. So if you just enter blindly, you'll be in a loss. So you always have to wait for confirmation. So the confirmation, okay, that's the last part which we talk about. So we have this is what you call the liquidity zone. So you always have to wait for this liquidity to be taken out. Liquidity zone, yeah. So again, another thing to look out for is this liquidity zone is always going to be, most of the time is going to be taken out by what we call the Marubozu candle.
What candle?
Marubozu candle.
Okay.
It's a big candlestick like that. It's a momentum candle that will actually take out these people, and then that's a candle that will confuse breakout traders to think that the market is actually going to the upside.
Oh,
yeah.
How do you spell the name of that candle?
Let me see. This is Marubozu. I think something like this. I have to check the spelling. I'll show you. I'll Google it and then I'll show you even the picture. No problem.
Okay, thank you.
Yeah. So we have this candle. Actually, it will be a nice momentum, more like momentum candle coming to this level. So when people see that, the breakout traders will try and buy. And then guess what happens? The market comes to this level here. Then we'll have a rejection from this level, and then the market tanks. So we always have to wait for a rejection from that level before we actually enter. Very, very important. So when we see a big momentum candle breaking this level, that's actually confluence that the market is actually going to a tradable zone, to a level where we are most likely going to sell from. Because that will confuse most retail traders to actually let's think of buying when the market is about to sell. So this is how they play us. They will trick you into selling when they want to buy, buying into when they want to sell. So that's what happens most of the time.
Yeah.
So this level here, it will have a cluster of stop losses. A lot of people will be trying to sell from here, and the stop loss is going to be there. And where there are stop losses, that's where we put our entry. So their stop losses is our entry. So that's how it is. So let me just delete this. Okay. So after that, so meaning our progress is complete. So we have to identify, you have to ask yourself, am I having a fake out? Which I want to just to concentrate on the fake out. Only look for fake outs. Just look for fake out only.
Only look for the only look for the fake out number 1, right?
Yeah, fake out version 1, yes. So
okay,
you don't need a lot of complicated strategies for you to make it. You just need one setup. One setup is enough.
Yeah, I like that.
And then you just need to continue executing. And remember that you will never know which trade is going to win. Just think about it. If you knew for sure that a trade was going to work, why wouldn't you risk your whole account?
Yeah.
I mean, you would, but no one does that, right?
Yeah.
Why?
Yeah.
Because subconsciously they know that anything can happen to that particular trade, but somehow they choose to ignore that fact, right? And yeah. Otherwise, you never, on a trade by trade basis, you have no idea what's going to happen. But we know that when you take several trades, we know that you're going to win because of what? we've back tested and we have the data that has shown that this trade setup works. Yeah. So the next part is what we call the approach. So the approach is, so this thing I've covered right now is actually the approach. So we can have the market coming after breaking this level here, the market can come to you, can form what is what we call a rising wedge, where the market starts to compress a little bit like this. You see what is happening? It compresses and then drops. Yeah. So all this is how you can actually look at it. So you can find something like when the market is coming to you, it's compressing, then just know that there's a high chance of expansion after market actually does that. So this is something that you can look for. We look for a compression, and after the compression, you will see market breaking the liquidity above that and then drops. So here, basically, we're just looking for confirmation. So when you see this, you know that okay, there's a high chance of price actually reversing. And then at this level, we're also looking for things like a bearish pin bar. We're looking, those are confirmation. We're looking for a bearish engulfing pattern. We're looking for an evening star, all those bearish reversal patterns. That's what we're looking for on the approach here. So that's your confirmation for entry. We wait until we have.
What was the, sorry, what was the last thing you mentioned?
The evening star?
I'm trying to write down all the confirmation signs.
Okay,
you have the
evening star.
Evening star. Okay.
Yeah, evening star, the bearish reversal pattern, the bearish engulfing pattern.
Bearish engulfing, okay.
And bearish pin bar.
Bearish pin bar, okay.
Yeah.
And also this momentum bar, this Maru whatever.
Marubozu candle. Yeah, the Marubozu candle. Yeah. Okay, I'll show you in a minute. So then above here, remember, like so the supply and demand. We have 4 types of supply and demand zones, right? So we have the we have the rally base drop and the base drop rally, and then we have the continuations. So this right here is a rally base drop. So that's the reason why we call this RBD. RBD, rally base drop supply zone.
Yeah.
So you always have to make sure that this zone is fresh. So another thing that I forgot to mention is you always have to put a horizontal line on your higher high and then zoom out of your chart so that you make sure that that level is not having contacts in the past, in the recent past. You don't want the market coming to this higher high in the past. You don't want to have the market coming to this level like this. You understand?
Okay.
Why is that? Because it will look just like this, meaning there's a high chance that the market is going to do what? You get it? Yeah.
So you do this at the past stage, in the past stage.
Yeah. So you on the past. So you just make sure that you put this level here and look to your left, zoom out and look to your left. Make sure in the recent past you don't have market touching this level, because when you have that, it decreases the chance of working. Yes, it might work, but the chances of it working are reduced. I've seen setups like that working, but doesn't mean that it's going to work most of the time. And remember about the probability, it's always about probability. So it can work. So when you have such a case, probably you can maybe reduce your risk. If you're risking 1%, probably you can use risk half a percentage, just like that. So that you know you're objectively identifying your setups. You know which one has got a high probability of working and which one doesn't, right?
Yeah. Going back to just now, when you say that you draw the horizontal line at the higher high, and then do you go up a time frame to check?
Yeah. So you zoom out. If you can't find levels touching, then you can go to the higher time frame.
Okay.
Yeah. So this is a complete QML setup. This is all you need This is all you need. From here onward, you just need to keep on finding this. Look for this. Every time you open a chart, make sure look for this. Ask yourself, do I have my past here? If I have my past and everything, then I'm able to analyze. If I tell you I go through probably like 50 setups, like right now I was just analyzing some pairs, like I'll go through probably 40 pairs, and then I'm just screening. If I see a setup, I analyze. If I don't see anything, I go to the next pair, just like that, until I come up with my watch list. If I set up because it's very clear, I'm very objective because I know what I'm looking for. So if it's not there, I'm not going to spend any time looking at the chart because it doesn't have my edge. So when I open a chart, I go to the 1 hour time frame or the 4 hour time frame. I look at the market. Do I have my setup here? Yes or no? If no, I go to the next chart. Like that, I can go through 40 pairs within 30 minutes and be able to actually come up with my watch list. Then those are my watch list. If 3 or 4 pairs, and then those are the ones I'm going to be looking at in that particular week. That's how I do it.
Okay.
Yeah.
Okay.
So
when you know, I'm trying to write down.
Sorry.
I'm trying to write down all the things you're saying. Very important.
Yeah. So this is how it is. So another what else? Yeah. And then here, like what happened the other week? What happened on Bitcoin and the Nasdaq? There was this. So the market came to this level. Then we sold. And then the market retraced to this level again after retracing, and then it sold again. So this can be your second entry here. The first entry is here. The market comes here, you can still sell. Once the market comes here, you can move your stop loss. And then if it takes you out, you can wait for price to come to this level, because this level usually it will be a fresh supply zone. Your value, your setup will still be valid. If you didn't move your stop loss, then you can still add another trade there, another entry. It's okay.
Yeah.
But as long as the market is not trying to react from this level, then just let it go. Sometimes the market just come here and then go to the upside.
Okay. Two questions. Number one question, I want to go back to the what you said, drawing the red line at the higher high.
Yeah.
So the higher high, if I zoom out the chart, would this higher high be the second of the dual resistance, or would it be the third one that you are looking for?
This high, it can be any. It can be the second. It can be the second. It can be the third. So you don't want this level to be touched by two. I mean, like maybe the first or second touches. It should not be. You don't want any levels touching this level. You don't want price touching this level. What immediately does, yeah, even one, because that's one. That one, meaning, for example, right? So meaning, if I have this level here, right, and then I only have one touch like that.
Okay.
You see, meaning this becomes R1, R2, and guess what happens? Most retail traders will try to sell on the third touch, right?
Yeah.
So meaning this won't hold. Price will go to the upside to break out the liquidity above, because these are equal highs. There's a reason why people still trade support and resistance. Sometimes, yes, this will still hold and cause price to go down, but this won't happen very often. So you want to avoid that, or use a much smaller risk on such a trade.
I see.
Yeah. What's the next
question? Okay, great. Yeah. That's very clear. Yeah. Just let me write it down first. Okay, done. Okay, second question. Yeah. Do you personally prefer to trade the first retest or the second entry? The first entry or the second entry? Do you prefer them or?
Always I enter on my first entry. This second entry is not reliable. Sometimes it won't come back. Sometimes you just come up to this level because it's a retracement. It's basically a retracement. So when market drops, then give some. This retracement can be just small like this. It can be big. It can even be like this, or there won't be a retracement. Market will just drop, 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 drop. So if you're waiting for a market to retrace back, you end up missing the trade.
Okay.
Yeah. So always, once you have the confirmation from here, just enter right like that. So always, if you're looking at the chart on the 1 hour time frame, go to the 15 minutes time frame to the 5 minutes for your confirmation. So look for those entries on the lower time frames like that.
Okay. You said 15, and what time frame do you look for the confirmation?
15 5 minutes time frame.
Okay.
Yeah.
Got it.
So this is how it is. This is how it is. So you make sure that you have a dual resistance. A dual resistance gives you confluence, but sometimes you won't have a dual resistance, and just one is okay. Then number two, make sure that the level breaking this level, the kind of candle breaking this level, make sure that it's momentum candles, because they show you that there's a higher chance of price going down, because there's a higher chance of price coming back because of this candle, which has an inefficiency, meaning price has to come back to that level so that it can fill that inefficiency. So price has to, there's a higher chance of price coming back. And then this higher high, make sure that it doesn't have levels coming to this level. And then also look out for this candle here that's going to break out this liquidity zone here. Yeah. And then confirmation here, wait for the confirmation. Once you have that, just enter. And then always predefine your risks. Always know exactly how much you're risking on a trade.
Yeah.
Can you talk more
about how you set your risk level?
Okay. So like I said, so if I'm entering from here, my stop loss is always going to be few pips above the higher high. Few pips above the higher high. So my stop losses are usually 20 pips, 30 pips, and less, just like that. So somewhere around this level here. And then my take profit is going to be on the next fresh demand zone. Okay, so I'm going to look for the demand zone. So if this here is my demand zone, then this is where my target is going to be. But my stop loss is always going to be above the higher high. A good amount of pips above the high.
I missed a few minutes because just now there was an interruption.
Okay.
Can you? So yes. You said you always set your stop loss a few pips above the higher high.
Yes.
If you enter the higher high. Okay.
Yes.
Then what did it say afterwards?
Then my take profit is going to be on the next fresh demand zone.
Okay.
Yeah.
Okay. That was the next question.
Yeah. Yeah. So that's how it is. So basically, you just need to keep on looking for this kind of setup. Just look for the same setups. Yeah.
Okay. What about if your entry is at the MPL?
So if the entry is at the MPL, again, the stop loss is going to be few pips above the MPL.
Okay.
Yeah, just like that. So we've clocked 40 minutes. So the Zoom might just cut now, but please rejoin.
Okay.
Yeah. So yeah, let me just look. I'm show you some of the pair. Let me just look at. I show you the Nasdaq trade right now.
Sure. Okay. So I wait to rejoin, right? You're going to restart.
No. It will. Let's just wait. Sometimes it delays. So let's just wait to see what happens.
This is a 2-hour chart.
Yeah, let me just go to the 4-hour chart so that it can be clear.
Okay.
Yeah.
So do you mostly start with the 4-hour?
Yeah, the highest I go to is 4-hour. That's the one I usually go most of the time. Is 4-hour and less and below. 4-hour, 2-hour.
Okay.
Yeah. So look at this beautiful setup here. Look at this. So you see that this particular, another thing I forgot, I didn't mention is that, so you have to always make sure that your QML is visible. Make sure it's visible, it's clear. So in this case, we didn't have a clear QML. Okay.
Yeah.
So we had just a small higher high, higher low, and then we had the higher high. You see that?
Yep.
And
yep.
then
It's not very clear.
Yeah. After that, we had the break of structure. Look at these candles. Look at these candles here. You see this?
Yeah, very long candle.
Very long candle. Yeah. So you're looking for such candles. So you're looking for such momentum candles.
Yep.
So this tells you that at this level here, there are unfilled orders which needs to be filled. So after that, the market drops to form a lower low. And then it gives us what? A resistance there and another resistance here. So the past is complete. Then we're looking at the progress. So the progress, what do we have? We have equal highs here, meaning we have fake out version 1. And then what happens? Remember what I told you about the candle that breaks the structure? Look at this candle. It's this candle here. You see?
Okay. Okay.
That's the Marubozu candlestick. That's a thick candle like that. This.
Yeah.
It breaks the structure and then it comes to this level here. And then if you look here, after that, the market is rejected, and then we have few candle rejections there, and then we saw the market dropping. We saw the market dropping beautifully. After that, the market retraced. So this was actually Friday, the market dropped, and then Monday opened, the market went to the upside. Then we had the second entry here. And then the market just dropping, and it's still dropping up to now. This was taken 3 weeks ago.
So your TP is at the very bottom of at the beginning of this long uptrend.
Yeah. So my TP is here, right here. That's where my TP. Yeah. So what you do is you just keep on trading the stop loss. Just keep on trading the stop loss. So my stop loss right now is around this level. It's around above here.
Ah, so you trail your stop loss. I see.
Yeah. So you just keep on trading the stop loss, trail the stop loss, trail the stop loss, just like that. So there's a high chance that the market will still come to this level. Because this is almost like 2,000 pips for the market to come here. Once the market comes to 2,200 pips. So like so far the market has moved about how many pips? This is like 1,300.
Wow.
Just for this one. So just one trade like that, you can just hold until. So this is a swing trade.
Yeah. Can you talk a little bit more about how you trail your stop in this specific case?
So right here, I can tell you what we had here. The market did this. So when we entered here, I actually sent this setup to the group. Actually, even the public group. So the market dropped. Then I had moved my stop. So sorry.
Did you enter at the second?
No, the first trade was here. The first trade I entered right here. So how I move my stop loss is this: when the market breaks the previous higher low, higher low. So in this case, we look at your higher low. Where is your higher low? My higher low is here.
Yes. Yes.
So this first trade, the market didn't move. It didn't break my higher low.
Yep.
So initially you can't move. Yes, I can't move my stop loss. So, but but I think I moved it to break even. So when the market came back, it tagged me out. And then it gave me another extra confirmation here because this was Friday. I think I'd actually moved my stop loss to somewhere with this level here. And then when the market came back, it tagged me out from here. Then I saw another beautiful entry here. I was like, okay, this is a second entry. And that's why I actually entered from here. So the way you move your stop loss is you move it behind structure. So like the way it is right now, the market is dropping like this. Once this is broken, then you can move your stop loss to break even. Once the higher low, this higher low has been broken, because you know that once the market breaks this higher low, meaning the market is going to continue going down. Yeah.
So you move it to the lower high.
Yeah, you move behind structure. So again, if the market makes a lower low, a lower high, and then a lower low, again, the stop loss is going to be above there. Again, just like that. So if once the market broke this and it formed that, once the market breaks this here, you move your stop loss behind that level. So you can just ride it, just like that. You can just continue to go down. You always have to pay yourself. Never just take a trade and let the market just continue going without paying yourself. Because at any particular time, the market can still go against you and take you out. So it's always important that you pay yourself. Of course, don't move your stop loss too early, because if you do that, the market just take you out and the market goes in a direction and you'll be left out. So always make sure that you trade your stop loss behind structure. Let price action tell you when to move your stop loss, because you know that a downtrend is a series of lower lows and lower highs, and the uptrend is a series of higher highs and higher lows. So the downtrend only becomes only stops becoming a downtrend when the market breaks the higher low to the upside. Then you know that the market is no longer in a downtrend, right?
Yeah.
So that's how you're supposed to move your stop loss.
Now, in this case, when you initially enter, how many pips did you set the stop loss above the higher high?
So in this case, my stop loss is about 200 pips. This was a swing trade, so about 200 pips stop loss.
Okay.
Yeah.
So this is how much above the higher high? How many pips above the higher high?
Above the higher high. I mean, English, that's just a few pips. Like let me just see, because the higher high is here. About 50 pips above the higher high.
Okay.
This is the Nasdaq, so it's in terms of pips it's different. So I don't know how they actually do this one, but it's different with the currency pairs, because these pips are just too much, because how volatile it is. Same with the US 30 and other indices. Yeah, but basically it is like this. So this was very, very beautiful trade.
Yeah.
So another similar trade like this was Bitcoin as well. It's just like this. It was actually the same week. It was in the same week, actually, same time. Let me just show you right now.
So I noticed that one week, this particular week, you had a big winning trade in the Bitcoin and Nasdaq, and then this past week, your winning trades are in the currencies.
Yeah. We had so some like this one. We never had so many indices to trade last week, because for me, I was already in these trades. So others were still taking some longs here. Because for me, my setup, like it's for me, I'm just holding right now. I'm just holding this trade because I know that my long-term bias is still down. So there's no way I can't do anything else. So I wasn't even taking any trades from here. So if you look at this is a Bitcoin. So if you zoom it, let's zoom in from here, so you can see that as well. This was not very clear, but we had a nice QML low and higher high, and then break of structure. Look at these candles.
Yeah.
So we had the nice break of, here it's very clear. So you have a QML, we have a low, higher high, and the break of structure. And then this one is what you call the version 2. So you see that this was a support, and then it was turned into resistance. So support.
Quick question.
Yeah.
Quick question. When you say when you look for the high probability trade, do you look at specifically where there is a long candle, momentum candle breaking structure?
Yeah. So when you have these kind of candles like this, just like I said, most of the times, like these momentum candles, these tell you that there's a higher chance of it coming back to this level. So you always have to actually look for that. But sometimes you won't find them, okay? Because they're not always going to be there. You won't find them sometimes. So you just take the trade as long as it meets your criteria. At the end of the day,
okay,
even this same setup with a beautiful momentum candle, it will still fail. So there's no choosing and picking and say, this one is going to win. You have no idea over what's going to happen on an individual trade. So as long as we know that, the setup works, the job just becomes to execute. When you see the setup, just execute. The outcome would take care of itself at the end of the day.
Another question.
Yeah.
In this particular example, you mentioned that the higher time frame trend is down. So do you actually go up a time frame to check for the overall trend before you take the trade?
Yeah.
Or before you determine the probability?
So basically, yeah, you have to do that. You do that, but for me, because I don't do that often because I know how my setup looks like. So when you're starting out, it will be important for you to do that. For me, I just look for my past. Is my past there? Do I have a QML low and high, and then break of structure? Do I have that? If I have that, then I'll know that it's either this is just a continuation, like this one. You see, this is a continuation of the downtrend. You see, the downtrend is down. So meaning this is just a retracement for price to actually move to the downside. Yeah.
Now, in this case, the QML is not a dual resistance, right?
So in this case, it looks like it is actually. So let's just go let's just go there. Yeah, it's a dual resistance actually. Let me just zoom in a little bit. It's actually a dual resistance. So you see there was actually, so what I like doing is just get a horizontal line. See, you have actually a lot of fake outs, a lot of rejections here. Yeah, so this is your dual resistance.
Okay, so it doesn't have to be exactly the same level. As long as there are rejections, you consider it dual resistance.
So remember, when you're looking at it's not really an exact price point, it's a zone. It won't be, sometimes, most of the times you find that they're actually equal highs, but most of the times, remember, when you're looking at support and resistance, it's a zone, it's not really an exact price point.
Okay.
Yeah. So that's what we had. So we had the QML, we had the low, we had the higher high. And then at this level, we had the support. And then we had a resistance and the resistance. So this is what we call an SR flip, which is the FAKEOut version 2.
Yeah, I recognize that.
Yeah. And now look at this candle here. Remember, that's a Marubozu candle. You always have to look at that. Make sure if it's there, it tells you that, okay, here I have a higher chance of price going in my direction. The market came here. So when people see this, a lot of people will be buying. Again, these people here, others would have already placed their pending orders to sell from here, and then they'll be taken out. And then the market only comes to this level, and you can see this is a rally-based drop supply zone exactly at this level, and then the market drops. Just like the Nasdaq trade, you can see the market dropped nicely, and then it retraced back. where exactly, so if you look at this again, this is a clear case of, you see this is it.
This is supply zone, yeah.
Yeah, this is a nice inefficiency candle, meaning this candle has price has to come back to this level so that you actually get more orders from that area before you can drop. And you can see after that the market just dropped beautifully, and this is Bitcoin. This is, you know how heavy Bitcoin is. These were beautiful, beautiful trade. A textbook setup. Textbook setup. Yeah.
Now, question. The earlier trade with the what was that, Nasdaq?
Yeah.
Can you go back to that chart? I want to look at the dual resistance. Is there a dual resistance there?
For Nasdaq, there was no dual resistance. It was just, remember, it was just a small, not very clear QML. So there was no resistance there.
Okay.
There was no, yeah, there was no dual resistance. So at the end of the day, it's about us making ourselves available when that big winning trade comes along. You understand? You make yourself available when that winner comes along, because you'll never know which trade is going to win. So therefore, if you take 3 losses in a row and then you get upset, you say, I'm not going to take the next trade. That's a trade that's going to be a winner. So for you to actually get to have that bigger winner, you have to endure these small losses. And for you to endure that, you must be able to predefine your risks and be comfortable risking that amount, such that even if it went against you, you're still going to be okay. That's
I have 2 questions.
Yeah.
I have 2 questions. Number 1, in this case, this Bitcoin case, can you draw an MPL at the QML?
So here we didn't have an MPL. Just like I told you, MPL won't always be there. There was no MPL here. Absolutely no MPL.
Okay.
Yeah. So the MPL.
Second.
Yeah.
Okay. So second question. Now, if you scroll back, the chart go back a little bit, scroll back, I don't know, 10, 20 bars, 10 to 20 bars.
I zoom out?
Not zoom out, because it's too small now. We can't see.
Okay.
Just move it back a little bit. You see, before this QML, there is a higher high.
Yeah.
And then before the higher high, there is actually something that looks like a dual resistance QML there.
You mean here or here?
Here, yeah. This is like a perfect dual resistance QML.
Oh yeah, you mean at this level, right? Yeah. There was something like that. Let me just try to zoom in. Yeah. So we had something, yeah, it was actually a nice one, a nice one. Yeah, we had the QML here, we had the QML high and the low, high and break of structure. Yeah, you're right. So there was one here, but I don't know how I paid attention to this one, not that one. I don't.
Okay.
I didn't even notice that one. I looked at this one here.
So if I use that dual level, which is almost like a equal high, those dual level QML,
yeah,
would it change my entry at all?
If you had used this one here.
Yeah.
You mean if you had used this
that previous QML?
Yeah.
How would that?
Meaning you would have missed this trade.
Okay.
You would have missed this trade because, so actually the fact that you've mentioned it, it's going to be like this. It's here. You see where it is? It's here. Meaning your entry is going to be here.
Okay.
Actually, meaning it's still a valid trade. So meaning this level here becomes what? R1, R2. You see that? So in the future, this is actually the perfect setup. Look, we have a QML, we have a low, we have a higher high, and break of structure. And look at these candles. Beautiful candles right there. So this is R1, this is R2. So at some point when market comes with the demand zone here, it will come back around this level to come and take out the liquidity here, and then you can still sell. Nice eye there. You've actually spotted the nice setup right there. So we already have a future Bitcoin trade to actually consider this at this level here, because this is a nice RBD right there. Nice. So this is what we had here. A very nice setup. Very beautiful setup. So let me just show you another one. Which trade? Which trade can I show you? Yeah. So GBP AUD. Let me show that you see the importance of trading a stop loss. It's always important. I think I deleted it. I think I deleted this one. What did I do? Because I was reanalyzing my setup, so I think I deleted the. I think I deleted it. Yeah, but it was at this level here. Yeah, let me just analyze it again for you. So what we had was this. Okay, so we had yeah. So this is the QML. We had the QML here. Can you see?
Yep.
Then we had a lower low and break of structure. So my low, I chose this low here, and then another low can be here, but I chose this one here. And then this is the higher high. This is the higher high right there. And then this is the lower low.
Yep.
So when you do this, meaning this is the higher high here.
Yep.
So with this trade, we took this trade actually. So then the break of structure was here. So I'm looking at this level here as my break of structure. And then the market formed the lower low. You see what happens? Yeah, and this is mine.
You also have your fake out too.
Yeah.
Fake out one.
So I have a fake out one and fake out two there. So I look at that, and then I get this. So I have the market is faking out from this level here. So I have R1 and R2. So this is R1. This is R1 and R2. R1, R2 right there. So you see what happened?
Yep.
And then the market came to my level right here, and I sold. My target was here. You see, do you see what happened?
Yep.
The market came beautifully to my level. Actually, we entered here, and then we sold. And then the market moved about how many pips? Almost like 170 pips. After that, the market started going to the upside. So if you don't move your stop loss and you wait for price to come to this level, you are going to be taken out. You see what happened? The market went to the upside.
Yep. Yep. So did you move your stop loss?
Yes, I moved my stop loss. I was taken out from somewhere here. So what you do is you go to the lower time frame. I'll just show you right now. So another thing that gave me confidence about this trade working was this. Look at this candle. This is what actually gave me confidence that the market was going to actually reverse from this level here. So basically, I wanted to actually enter from there. Very nice trade because of this level here. But for the chart to look nice, I just had to cover all this so that the chart needs to look nice. The chart needs to look clean. Yeah. So what you do here, so how do you manage this kind of a trade? So you always manage the trade from the lower time frame. So you don't wait for price to reverse or do whatever in the higher time frame. So if you go to let's go to the 30-minute time frame. You can't let the market come and take you out on this nice trade. No. You can't let the market do that. So if you remember, we said we want the market to take, once the market takes out the higher lows, then you can start moving your stop loss. You see, the market took out all these higher lows. So I was taking out the market. I think I came out. I was taken out from this level here. When the market pushed to the upside, that's why I was taken out from. Why did I move my stop loss from? Why did I move my stop loss behind that? Because the market had formed a lower low, and then lower high, and then lower low. You see that?
Yep.
Meaning the latest lower high is that one there.
So that is your trailing stop.
Yeah, my stop loss is going to be here. So once the market came here, I was taken out from that level. But you see, good pips. I think almost like 100 pips, if I count. You see, still I was able to secure almost 100 pips. Yeah, exactly.
So my question is this: if you use this trailing stop method,
yeah,
a lot of the losing trade will be reduced.
Yeah, you won't have a lot of losing trades. You have a lot of break-even trades, or the ones that, or small profits. So you should never let a winning trade turn into a losing trade. Never do that. Never let a winning trade turn into a losing trade. Always pay yourself.
Yeah. Do you have a case example where you actually lost the trade and actually where your stop loss was taken out?
So yeah, those happen very often. Let me see which trade, because I was deleting most of the setups. Let me see. Which pair is that? Let me see. Let me just check the ones I actually. Let me see. Which trade did I lose last week? We had
New Zealand, Swiss.
New Zealand, Swiss, huh? New Zealand, Swiss. Yeah.
And also the gold. Gold was also losing trade, and pound USD also a losing trade.
Yeah. So this one here. Yeah.
Okay.
So you see what we had?
It went straight through.
Yeah. So what we had is this, first of all. So we had the nice QML. We had a low, a lower low, and the higher high right there. So we had the low, high, lower low, and higher high.
Yeah.
The past is complete. This is a buy setup. And then we had support. Do you see that?
Yeah.
And then after that, so let me just go to the lower time frame. Let me go to the 1 hour. I saw 1 hour, I think so. So like I'm always preaching, you will never know which trade is going to actually go in your favor. So you can see from here, the market nicely from this level here. There was a nice rejection here, more like a bullish spin bar, and then the market pushed the upside a bit, and then on the lower time frame, we entered from here actually, from this level here. After I entered from here, the market pushed to the upside in profit, came back, pushed again in profit, and then it took us out.
Oh, yeah.
So
there is no time to move the stop loss in this case.
Yeah, you can't move your stop loss. And so you're going to move your stop loss when the market broke this level here. Then you'd have moved the stop loss. Yeah. So there was no chance to actually move the stop loss here. So you never know which trade is going to win. You will never know. All these setups have got this exact same setup, but some are going to win, some are going to lose. What's the secret? You see the stop loss? The stop loss here was about 10 pips. The stop loss was 10 pips. And the target was 120 pips. This is the 1:11 risk to reward ratio. How many of those do you need in a week? Just need 2 or 3 setups that, even just 2 setups that we reach your take profit, you're okay. You understand? So you don't need like to have massive winners. Nah, like a lot of them. Just need 1, 2 trades that reach take profit. Yeah, I know that I'm going to be like high. I'm going to be like good in terms of percentage. So I'm just going to make sure that my stop loss is small. Once my stop loss, once I'm taken out from here, then I'm out. I'm not going to try and fight and say no, maybe Shan. Nah. Once the market takes me out, I'm good. I go and look for another setup. So another trade actually was let me show you the AUD. Yeah, this one was a break-even trade. Let me show you. AUD NZD. This was a break-even trade.
Okay.
Okay, let me just see. Okay. So if you look at this.
Yes.
All my setups are the same. All the setups are the same. So you don't need some complicated strategy out there to just need one strategy, and just the job just becomes to execute. Just execute. When they see the setup, execute. See the setup, execute. That's all. Because you have to understand that you never know which trade is going to go in a direction. You never know.
Yeah.
So you can't try and you can't be picking and choosing. No, this trade, maybe this one, maybe this one. Nah. So look at this one. Geo resistance, right?
Yes.
Then we have a low and a higher high. After that, we had a lower low. You see that?
Yes.
And then we had resistance and then another resistance right here. So this is a rally-based drop. So when the market came here, it broke out. It broke this level here. So let me just show you right here. Price broke above that level, and then so let me go to the 4-hour time frame. Let me go to the 4-hour time frame. You see what I'm talking about? You see? So the market came to this level after breaking on the liquidity there. The market came here. This was my entry here.
Yeah.
You see, the market dropped. Remember, mind you, this is the 4-hour time frame. So this might look very small, but this was actually about 80, almost like 100 pips, 89 pips. So
Yeah.
can you let the market move 89 pips in your direction without moving a stop loss? No. And then the market actually broke this level here. You see this?
Yeah.
That's the higher, that's a recent higher low. So once the market did that, then I moved my stop loss to break even. The market came back, it takes me out, I'm okay. And guess what the market does? Goes a little bit in my favor, and then it pushes to the upside. I get out with the break-even trade, no loss. So that's what happened. That's what happened.
It was a perfect setup too, with the dual resistance.
Yeah, like this one, exactly. So you'd expect this setup to work, right? You think that this trade is going to work, and let me try to put so much money on this trade. I know it's going to work. I know it's going to work. And guess what happens? The market comes to you and takes you out. So that's the thing. You never know which trade is going to win. No matter how much confident you are in your setup, we don't have that capability of knowing which trade is going to win. People, the ones that tell you that they have a strategy with 90%, they're just lying. They're just lying.
Can you zoom out the chart a little bit?
I zoom out.
I wonder if
I zoom out.
Zoom out a little. Yeah, zoom out a little bit. Is there a bigger? I wonder if there is a bigger QM like behind the last higher high.
Okay, so let's put this level here. So we see why it fell. Okay, so if we put the level here, and then let's zoom out. So you see this? There was a level here. The market came to this level here once. This was the second time, and then you can see the market breaking that liquidity there and going to the upside. So probably that was the reason. So again, you see, if we remove this, so the other reason the market was taken out, probably it was coming to this level. You see?
Yeah.
That's the level it was coming to.
So in this case, after a break-even trade, would you still continue to look at this and possibly enter when it reaches the higher zone?
So yeah, when I'm able to identify a zone on the higher level, yes, I can still enter as long as I still have my confirmation. So right here, this is my low, my high, low, and higher high and break of structure. So this is actually a valid setup, still a valid setup. This can still be a valid setup. So as long as you have your confirmation, you can still go ahead and actually enter into this particular trade.
Okay.
Provided you have your confirmation, yeah. That's how it is. That's how it is. Otherwise, so like let me just show you. Let me just show you the last one right now. Like the trade I sent out on Friday. This one, the USD Swiss, which is still be active for next week.
Oh, this trade has not happened yet.
It's still moving. The market was slow on Friday, but I sent it in the group on Friday. People actually
Oh, the second. This is a,
yeah.
Okay. This is an ongoing trade.
Yeah. So you have a high, you have a low, and then you have a higher high, and then you have beautiful break of structure. You see this candle here, beautiful.
Yeah, beautiful. Yeah, beautiful structure.
And then you have R1, R2, and then look at this nice candle, like exactly what we're looking for. And guess what? The market comes to this level here, and then you can notice once the market comes here, you have rejections from that level. So the signal was sent from here, and the market is already dropping.
What time frame is this? How do you draw that LBD supply zone?
So
this is a 4 hour.
This is 4 hours. So let's go to the 2 hour time frame. You see.
Okay.
So on the 4 hour, it's still a pin bar. Let's go to the 1 hour. So market is the price is fractal. So you see that, yeah. So you see what's happening on the 1 hour. Let's go to the 30 minutes. Let's go to the 30 minutes. We see what is happening. Yeah.
So you went down the time frame because it was a pin bar.
Yeah. So you want to you see this?
Okay, got it.
Yeah.
I see it.
So this is what I was looking at. This is on the 30 minutes time frame. But when you go on the 1 hour, on the 4 hour, it will look just like what? A pin bar. You see?
Okay.
Yeah. So this is how it was. And we're just waiting to see how the market is going to react from here, whether it's going to continue going down. So of course, we have a higher chance of it going down. So stop loss is about 31 pips, and then target is about 265 pips. So this is a 8 to 5, 8.8 to 8, 1 to 8.5 risk reward ratio. Beautiful setup. So if you've noticed, we don't take any trades that give us anything less than 1 to 5. We don't do that. All our trades have a risk to reward ratio of 1 to 5 and above.
Okay.
Yeah, so that's how it is. Any questions?
Let me just write this down. Less than 5 hours. Okay.
Yeah.
Okay. No question at this point. Very clear.
Very clear, right?
Yep. Very clear.
Yeah. So I need you to start sending screenshots. I need you to get busy looking at the charts. Start identifying these charts. You can actually go back in time, but on TradingView, try and go back, try and train your eyes in order for you to be able to identify these setups. So that once you get used, it will be very easy for you to be able to identify these setups.
Yep.
Yeah. So that's how it is.
I will start doing that. This week I'm very busy. This coming week I'm very busy with some household commitments, but I'll start doing that. I'll at least send a few charts this week, and then when when I'm done with this week, then I'll be able to send more.
All right, that would be great. That would be great. Yeah. So that's all for now. I don't know if you have anything to say.
When you are looking at the setup at the past stage,
Yeah.
do you always go up a time frame to check, or do you always zoom out to check if price has already touched that level? Is that a part of your operating procedure?
It's always important for you to do that. You always have to check, make sure, because if you don't check, your setup will just be taken out as liquidity. If you don't do that, yeah.
And when you check, so number one thing, you check whether price has touched that level before, the higher high. And second thing, do you also always check if the trend is on a downtrend?
So yeah, that's the basic multiple time frame analysis. So it's always important for you to do so that you know exactly where you are from. Of course, you remember you should know that our strategy is a reversal. It's a trend reversal strategy. So we are always trying to actually sell high and buy low. So we always have to make sure that you're looking at all those time frames. Do multiple time frame analysis, top-down analysis, just like that. It's very, very important.
So this strategy focus more on reversal trades than continuation trades.
Yes, most of it, yeah. So sometimes you can have just a minor reversal, which is just a retracement. You have to follow the major trend. Sometimes you can find actually a total reversal like that. As long as your past is there, as long as you have a QML, low, higher high, and break of structure, then then your setup is there. So whether it's a trend reversal, whether it's a trend continuation, just take a trade as long as you have your confirmation.
Okay.
Yeah. So that's how it is. That's how it is.
Okay, I got it.
Yeah. All right. So if you don't have any questions, then I think that will be all for today.
Yep. That's great. I've learned a lot. You have cleared up a lot of questions. Thank you so much.
That's awesome. That's awesome, Adrian. Thank you. And until next time, we'll actually do this again next Saturday.
Okay. Now, I may not be able to do this every Saturday like this because of the current time limitation and also the health situation with my family member. But I'll keep you informed. That is one thing I can promise to do.
All right, no problem, bro. No problem. No problem. Just let me know whenever we can do this. We can actually do that.
Okay. Thank you so much. This is most helpful today.
Thank you. You're most welcome. And I hope this has keep on practicing.
One last thing.
Yeah.
Yes. One last thing. Can you send me the recording so that I can review it later on?
Yeah. And also, can I use this for my YouTube?
Yeah, sure.
All right, great. Then I'll send you the recording just now. All right, then. Yeah. Let's talk more then.
All right. Thank you.
All right. You're welcome.
Bye.
Bye.